Hello great traders, today we'll be looking at step-by-step guide to use Fibonacci retracement effectively in Forex trading. My name is David Wekulom, currency trader and CEO of Wells. Without wasting time, let's look at the agenda for today. First, we will look at Fibonacci sequence, then we'll look at the most important Fib levels, then we'll look at how to draw the Fibonacci retracement levels, how to set stop loss and take profit target using Fibonacci level, and we'll look at real life example, and finally we will look at useful suggestions that can help us when we are trading with Fibonacci retracement. Fibonacci sequence starts with 1, then the next number is 1. You get the next one by adding the first two numbers, which is 2 plus 3 will give you 5, and you continue in that direction. 5 plus 8 will give you 13, and if you add it to the next number, it will give you 21, and then 34, then 55, and you continue in that direction to infinity. It was discovered by an Italian mathematician, Fibonacci, as you can see here. Now, let's look at some important things we can derive from this sequence. Number 1 is called the golden ratio. The golden ratio is gotten by taking any number in the Fibonacci sequence from 13 and dividing by the next number. For example, 13 divided by 21 will give you 0.618 approximately, which you have seen here. Another example, 21 divided by 34 gives you 0.618. If you take another number, 34 divided by 55, it will keep giving you 0.618. And this is very important. There are other Fib ratios, as you can see. If you take any number like 13 and skip one number, divide by the next, like 13 divided by 34, it gives you 0.382. If you take 34, skip one number and divide by 89, it will give you 0.382. which if you multiply this by 100, give you 38.2%. And there is another number in the series. If you take any number from 13, skip two numbers and divide by the next one, like 13 divided by 55, it gave you 0.236. Now let's look at another example. 21 divided by 89 gave you 0.236. And if you look at it, 38 divided by 144 gave us 0.236, and this is how it continues. Now the important Fibonacci levels in our trading are 23.6%, which we derive. We have 38.2%, we have the 50%, we have the 61.8%, then we have 78.6. There are other Fibonacci ratios, but these are the ones that we'll be using mainly for our trading. Now, let's see how this can be applied in real life trading. Now, look at this. For a buy opportunity, one point I want to state is that Fibonacci retracement is very effective. It's mainly used for a trending market. If you have spotted a trend and the market has given you the last swing, as you can see here, it gave an impulse move, a pullback, and the last impulse move. When you have seen this, you bring out your Fibonacci tool and mark on it from the beginning to the top of that. And the market can either do a shallow pullback. If it is a shallow pullback, it will not reach this 50%. If it is a deep pullback, it will go beyond the 50% to other numbers. So we prefer most of the time that it should give a deep pullback instead of a shallow pullback. So let's watch what happens. When it is retracing, will it retrace to 23.6%, or the 38.2%, or the 50%, or 61.8%, or the 78.6%? So let's see what happened. The market actually retraced to 0.618% in between this area. This is a place where we like to see the market most of the time. So if the market is in a trend and it has retraced to this zone, what you need to do is to go to a lower time frame and watch for candlestick reversal patterns. When you see a candlestick reversal pattern that agree that the market wants to turn, what you do simply is to execute the trade there, and you can see, boom, the market started from here and gave you profit all the way up. So this is very effective. Let's look at for a sell opportunity. The market has been in a downtrend. Then the last swing, the market came down, gave an impulse move, a pullback, and gave the last impulse move. What do? You bring out your Fibonacci tool and draw from the beginning of that impulse move to the end and wait for a pullback. Will it give you a deep pullback or a shallow pullback? If it goes beyond 50%, that is a deep pullback, and it's very good for our trading. If it gives you a shallow pullback, most of the time I do not personally like to take those trades. So I prefer the deep pullback. So let's watch what happens. Will the market retrace to 23.6% or 38.2%? or it will retrace up to that 61.8% or 78.6%. Let's see what happened. The market actually retraced to the 61 point to the golden zone. So between the 50% and the 61.8% is called the golden zone. And when the market retraces to that point and you go to the lower time frame and see a candlestick reversal pattern, it is time for you to execute the trade. Stop loss is kept above that the beginning of the impulse move. The first take profit target is the first support or the resistance level that you are going to encounter. So let's watch for real life illustration. This market actually gave you profit, but let's see what happens in real life. In real life, what you have seen here, this was a chart of euro US dollar that we actually traded on the daily time frame. The market was in a downtrend. Then it pulled back and gave the last impulse move. When it gave the last impulse move, we brought out the Fibonacci tool and drew it from the beginning of the impulse to the bottom of the impulse and waited for the pullback. As you can see on your screen, the market actually pulled back to the 0.618%, which is 61.8%, and gave a reversal pattern as you have seen on this screen. And we executed the trade there. Stop loss was above the beginning of the impulse move. And then watch what happened. Just take a look at what happened next. From here, from the 0.618, you see that the market fell all the way, giving you profit from the beginning of that impulse move down, from the beginning of that pullback all through this impulse. You can see clearly that Fibonacci retracement is very effective and you need to master this tool. Now let's look at a buy opportunity. This market was in a downtrend, and after some time it gave the last impulse move. So when it gave the last impulse move, we brought out the Fibonacci retracement tool and drew it from the beginning of that impulse to the top of the impulse and waited for the pullback. As you can see, the market actually pulled back to the 0.786, which is the 78.6%, and showed candlestick reversal pattern. And if you go to a lower time frame, you can execute the trade better. But here it has already given us a sign that it wants to pull back, and we executed the trade there. Watch what happened. The market actually started from this point and gave profit from here all the way, all through here. So what do you do when you are trading with Fibonacci retracement? If you execute the trade here, stop loss is kept about 3 pips below the beginning of this impulse move. The first take profit target we like to exit 50% of our position when it retraces to the first resistance level or the first support. Then we move stop loss to break even and allow the trend to continue. We do a trailing stop loss to catch more pips. And Fibonacci retracement is very effective and you need to pay attention to this. There are few things I need to point to you if you are going to make use of this wonderful leading indicator in your trading. First of all, Fibonacci retracement should not be used for idea generation. Most technical analysis tools are used basically for timing of entry. And Fibonacci retracement is a technical tool. It should not be used for idea generation. You use a fundamental analysis for your idea generation, and it is very important that you do this. Many people think that they can use technical analysis to generate ideas. Well, you can do that if you are a scalper or you're a day trader. But basically, if you're a swing trader, which I'm a swing trader, you use fundamental analysis. So you have to analyze inflation data. You have to look at GDP data, you have to look at interest rate, you have to look at so many other economic data to come up with your big idea. And when you have looked at the big idea, you use Fibonacci retracement for your timing. And if you combine these two, you are going to be very effective in your trading. Now, this channel is new. It has been here for some time, but I just started posting videos here. So I will be doing a real important educational videos that can help you in your trading. So I want you to do me a favor, subscribe to the channel. If you're here, subscribe to the channel. And when you do, drop a comment. Tell me that you are subscribed. I'm going to thank you specifically. And so many important videos will be coming for you. And every Monday, we will be posting real life analysis of how the market is going to play out in the coming week. So this is going to be an important channel in your trading journey. And I really appreciate you if you press that subscribe button and press the notification. Thank you for the time you have given. See you in the next video. Bye for now.